Good morning, trading world. It is December 28th, 2021, 8:18 a.m. and this is my pre-market outlook. Today's title for the outlook: the Christmas rally kicked off with a boom. How much of a stall could we be in for today before continuation? All right. I guess the key question is, will we fizzle out today? It seems like we are likely to get a small stall to the rally. However, it could turn into more. Quite often, small rallies and sell-offs snowball into something larger. This is how we get the huge gamma squeezes or the other type of squeeze, the short squeezes that we go through, because it takes something to ignite and a lot of people jump on and it snowballs into something bigger than what it really was meant to be. Before we go into that, well, just to let you know what I'm looking at in the charts today, it seems unlikely, but here are some keys to watch and think about. As far as a big pullback rolling into or snowballing into something larger, and I'm saying right now it seems unlikely, but I want to kind of scratch the surface on one or two things just to show you what is going on, especially with an explosive rally like we're in right now. Just like in most rallies, a large portion of the buying is not really buying for buying's sake. It is usually due to closing positions or because of the time of year that we're at. It's rolling or tax law positioning. Now, most of us don't really know what to look for to tell what type of activity is going on. And since most of us don't know what to look for, especially with the general retail, they just see activity and they see a rise in price and buying, but they pay no attention to the declining volume, and they just jump on the buy side, hoping to be a part and ride the activity. Retail joining into this buy side activity gives it the extra boost to the upside. Now on the surface, it seems like a huge rally, but under the surface, take a look at the volume profile. Not sure how many are familiar with the volume profile, but usually on my chart, that's this big item over here to the right side of the chart. I'll bring it into focus. This is the volume profile, and the standard way that the volume profile is set up, you have your point of control, and then I have it set to a 70% value area, which highlights the nodes that are 70%, at a 70% rate of what the overall volume is. But the point of control is the highest node of activity. Now, knowing that, this signifies where, again, I repeat it, it signifies where the highest actual activity is taking place, or otherwise the biggest piles of open interest are currently on that time frame. So now that you know this, on the surface it seems like we're just rising and prices are going up. But if you pay attention to the volume profile, you realize while we're going up, the actual point of control and volume nodes are actually falling. They're not going with the activity up. They're falling. They're going lower. I wish I had wrote it down, but I know on the daily, we were, I think it was close to 279, and now today we've fallen to 276 and some change. And it's like that with every time frame that I've looked at this morning. All of the time frames of all of the point of controls are falling. Now, what this signals is that even though we're going up in price, actual positioning is headed lower. Now think about the time of year that we are at. There's a lot of tax loss selling. There's a lot of rolling of positions. There's a lot of closing of positions. And when you realize a lot of the gamma squeezes and short squeezes that we go through, a large part of the activity isn't buying at all. It's usually people closing positions. So when you think about that and think about where we are, what time of year we are, this should really speak to you in understanding what's going on. Because eventually prices will catch back up with where the POC or point of control is. Eventually it'll catch up. So it takes longer on the higher time frames. It takes a lot longer, because if you look at where we are on the monthly or the weekly, we're a long way away. But usually on the 30-minute, 4-hour, those we pretty much stay in tune with. On a regular basis. We might get stretched out for a couple weeks, but we usually find our way back. So I just wanted to point that out, because a lot of people kind of get it confused of why we have these super rallies, why the Santa Claus rally really is. In some years, it may actually be a rally with a lot of buying behind it. But I wanted to point that out this year. It just really stuck out to me this year of how fast we're going up in price and how everything is falling as far as open interest or the real spots where positions are being held. And so it just kind of speaks to me that we may be in for something at the beginning of the year. I've been saying a lot that this market was being held together by fund managers not wanting to sell so that they can hold on to possibly getting these huge bonuses. And so they found certain mega market cap stocks to buy while they let everything else fall apart. And this was able to keep us at these nosebleed levels in the market. So also keep in mind that all of that stops January 2nd, January 3rd. Now, we should get a continuation of a boost January 2nd, January 3rd, because that's when all the new funds are released or have to be put to work from all the retirement and 401ks that have been collected through the month. So we're likely to see continued rise in buying January 2nd, January 3rd. But after that, be very, very careful. All right, let's get into key levels for today. All right, here we have the key levels of the day, starting with resistance. Jack resistance is going to be 478. Queen resistance is going to be 480. And king resistance is 482 through 484. We have Jack support at 477. Queen support at 476 through 475. And king support at 471 through 470. Now, keep in mind that the battleground to go lower is the tip of the 475 area. If we somehow get down in the 475 area, it is quite possible. If we get deep into 475, it is quite possible that we head down toward this 471 area, that we make it to at least touching the 471 area, because there's a lot of sell side order flow once you get below 475. Now, when it comes to today's planning and what to look for, the day map, it is usually very rare that we get back-to-back trend days. It's really, really rare. But when volatility is where it is, it kind of throws all those rules out of the window. And believe it or not, volatility is still elevated to a degree. So, things that could possibly happen today. we had a close of, what was it, 477.26. So that's going to be a very important area coming into this morning. So if we get to this 477.26 and support holds there, we're likely in to see another trend day to the upside. And we could pretty much see something like this again happening today. However, if this 477.26 does not hold, we're more likely in for a range day. Before I get into the range day, let me also highlight the other variation of a trend day, which is what I like to call a change day, which is somehow we just get going up here and we have this type of activity. Now, the blue represents the change day of what could happen as well. And the reason that we're going to know the change day is because you watch internals and you watch your indicator. And there's going to be divergence from almost the opening bell from where we take off going up in price, and you should notice internals or your indicators, whatever you watch, should kind of be fading ever so slightly down or trending down, going the opposite of price. And that's going to give us the clue that we're in for this change day, the blue arrow type activity. So I just wanted to remind everyone of how that plays out before I get into the range day scenario. Now, the range day scenario, if we don't hold, if we break through support at this 477.26, this is what we have to watch, because here at 476 we should have a bounce, and watch for the second try, because if we have a second try and we get down into this 475, we could have a fall lower down toward that 471 before we get another bounce. And the other thing to kind of keep in mind, which I just thought about, this is the more likely scenario because we're already at the market maker's expected move for the week. The entire week had us at a plus or minus 7.29 or something to that effect on the SPY, which would have put us at 477.89. We're already there. Now, in order to go higher, it's going to take a lot or a big burst of volume to get us off of this level. Actually, either way, it's going to take a big volume burst either way to get us off of this level. But it's likely today that we just kind of bounce around this 477. We could actually do more of this pretty much popping around this 477 until we get a spike in volume that either pushes us lower or higher. And the thing to watch for, if we get off either side, especially to the upside, if we get a volume spike that knocks us, let's say, above 479 or so, we could really kick it in gear and get going and see 480 or 482, 484. We could see those levels, because at that point, fund managers have to come in and hedge. And by hedging positions, they either have to buy or sell futures. And that's going to give us that volume spike to kind of keep moving, because right now at this 477, this is where everybody's risk is at a comfortable level, where we're okay. It's like an agreed upon price. This is neutral price right now. And above it, things could get out of control, because no one's really priced in that as a risk. So when we get above it, hedge funds and big funds, they have to step in and try to do something about it, which is hedge. So that's going to be something to keep in mind. But this is pretty much where we're likely to be for the majority of the day. So keep that in mind. The highest likely scenario today is going to be a range day centered around this 477 area, where we go back and forth above and below it. So be careful. As always, know your risk first, profit second. Wishing you a successful trading day. Have a great one.